You're listening to the Veterinary Innovation Podcast.
You're listening to the Veterinary Innovation Podcast. My name is Sean Wilkie, and along with my awesome co host, we interview the innovators in this space every week. Ivan, please kick us off.
Hey, I'm Ivan Zach, and I'm really excited about our guest today. We're going to talk about one of my favorite topics, which is employee ownership, and we have Kimball Carr. Kimball is the CEO and the president of Inspire Veterinary Partners with a distinguished 30-year career where he has overseen over a billion in revenue for companies including Starbucks Coffee, Mars Incorporated, and Trupanion. He currently resides in Virginia Beach. Kimball is a proud father to two teenage daughters and a dog dad to two canines. Kimball, welcome to the show. Thank you for finding the time.
Glad to be here.
So, 20 minutes is too short to unpack everything I love about this. Just give us the flavor to listeners how Inspire Veterinary Partners is different and what employee ownership looks like in your organization.
Sure. Those of us that know a little bit about our space know that the independent veterinary owner has been selling into consolidation for the better part of 15 years or so, which is a lovely, wonderful maturation of our space. I've spent about the last 15 years of my career working in this space. And what we identified as we were founding Inspire and conceiving Inspire is we wanted to be a different kind of ownership company and not necessarily exit driven, as most of the consolidators are in this space. And the private equity investor, in a world where we all love capitalism, is certainly a fine model for a lot of sellers. I personally didn't want to found and lead a company that was just buying up hospitals to flip them or be a short term owner or not address some of the challenges we have in the veterinary space, which we all know we have burnout and workforce challenges and wealth building challenges for doctors and technicians. So Inspire was founded as a different kind of company, funded differently, built on the platform of adopting very early on employee ownership through a shared ESOP program to give equity to our team members and to keep the leadership and ownership of the veterinary channel within the hands of veterinarians.
That's amazing. Kimball, I feel like we've bumped into each other somewheres along the way. You said you spent the last 15 years in this industry. Tell us a little bit about the founding story for Inspire. How did you guys get this off the ground? Why this model? What motivated you?
Sure. Yeah. So I spent about 8 years working with the largest provider in our space and learned all of the goods and the bads and the really, difficult and sometimes tragic of our space. We know it's a mission-driven space where doctors and techs join this industry because they maybe have been called to it since they were 8 or 9 years old. And I found a beauty in that when I was an operator in the space working at a very sort of large portfolio size that I helped manage for the company I was with. And so I got a chance to see the scope of all the wonderful impact we make on lives through pet parents being, taking care of their pets and the benefit of having pets and families together and the data that we know that supports that our life expectancy and our lives are made better through pets. And so it really sort of caught onto that vision and that mission and became very protective over my fellow professionals, the doctors and techs and other team members that lead clinics every day. I didn't see any companies that were taking, as far as I was concerned, enough of an impact in terms of their structure, management, exit plans, funding plans, long-term growth initiatives to try to answer some of these issues that vets face every day. And so when I had an opportunity to leave that 8 years working for the largest provider, I didn't want to sort of be an also-ran company, just another company doing consolidation the same way. Some co-founders of mine felt the same way, and they had knowledge and years of experience in consulting and recruiting within this space. And we have board members that are in the veterinary channel. So this really is a company founded out of folks that know this space and saw some of the contradictions we wanted to solve for. And very early on, as we funded and conceived the company, it was all about long-term growth, buying hospitals for years and years, not just an exit in every 2 to 5 years, and sort of parking money for a short time in a sector we know very little about. We consider ourselves career veterinary professionals, whether we're lay people like me or the clinicians that work for us. And as I said before, it was also built upon this desire of giving back to a team through letting them have a shared piece of ownership, a bite of the apple, if you will, and the ability to gain wealth through what they do every day and really keep them in a position of steering the profession.
That's awesome. Very similar to what I'm trying to do in Galaxy Vet. So can you help us understand the nuts and bolts? So are you growing by acquisition and just kind of the path of how the ownership becomes for the veterinarians? Are they partially getting liquidity? It's just kind of like all those pieces and how the staff is getting the ownership, like through what instruments. And that's
Yeah. So we do grow by acquisition and certainly by organic growth of the individual clinics once they come on to our platform. And I'm really proud of the things we've done in the first few years of our existence to build a scalable model that will allow those hospitals to grow. And some investments we've made that, quite frankly, because we want to be around 10 or 20 years with a clinic, we're willing to make, whereas maybe the shorter term buyer is not making in terms of infrastructure and tools and growth levers. But short answer is yes, we grow through acquisition. And today it's in the primarily GP space. In the case of one clinic, we also have some large animal. In the future, there will be other verticals that we will go into. And so even today, somewhat early in our history, we're looking at other revenue streams, other things we may purchase into, innovations that we're looking at making that will not only drive more revenue streams, but drive efficiency into our existing clinics. So the industry is changing, and Inspire will be very different in 1 and 5 and 10 years from now.
Yeah, it's fascinating. And before we kicked off the episode today, we talked a lot about the innovation, the funding of the organization. Why don't you touch on that, Kimball? Tell us what's different about the way that you guys have structured the organization and plan to grow it.
Sure. So, not dissimilar from some other consolidating groups, we started with private funding in the form of a couple different seed rounds and some investors that got together that saw an affinity for what we wanted to do. And early on, and some would say you take some pain doing it as early as we did, and we certainly learned some lessons. We decided to go for an IPO very early in our history, really after, about 2.5 years after we founded the company, which is blisteringly fast. And at a small size, a smaller valuation than we might have gotten 10 years from now if we had waited. The desire for that was a couple of reasons. Was wanting to reward and sort of transition and have an event that allowed those early investors to choose to stay or exit and do what they wanted to do, but then transition that structure into a public valuation, which gives us a lot more leverage and a lot more ability to do some things than potentially, a private company can do, which is sometimes constrained by some of the growth horizons that a private company is constrained by, particularly if you've got folks that are sort of short-term minded of their money. 2 to 5 year horizons can sometimes create some real pain down at clinic level. And that was one of the things I wanted to avoid as a leader. It's one of the reasons I said a polite no to some of the PE groups that offered a big sack of money to me and asked me to go buy a bunch of hospitals. I didn't necessarily want to be a part of the downrange pain that can come with that. And so we went IPO very early. We're a NASDAQ listed company, very proud of that. With all the goods, the bads, and the difficulties that come with that, we certainly built muscles and learned some things. And what that also allows us to do is have access to capital partners we wouldn't have as a private company. So we've matured in our banking relationships, matured in our investor relationships. We've learned in a marketplace of being a micro cap company out here what to say no to and what to say yes to. And that's allowed us to really have some agility and also the benefit of this 2.5 years of knowledge being a public company that allows us now to have capital partners that can come in, fund our growth on a sort of M&A by M&A basis. As we bring in money, we put that into a creative activity that allows the shareholder to see what we're doing as a company and sort of lather, rinse, repeat, and very carefully grow in that model, which is long-term minded. So again, isn't tied to some of the short-term things that can come from growing too fast or driving pain downward. So very different structure and very different way we've gone about it.
And why are you so convicted on this path? What do you think's what's different about it? I mean, it all sounds different from anything that I've ever heard about, but what does it allow you to do that you couldn't have done otherwise?
Yeah, so if you look at the typical structure of most groups and certainly hospitals, if equity is being offered, it's often offered within two sort of umbrellas. To folks, what I like to refer to as the top of the pyramid in certain ownership structures where it's certain levels of leadership and above or sellers and above, and it's not offered down into the ranks of the hospitals, the clinics, and some of the folks that are really driving hospitals and operations every day. We wanted to have a really broad and deep equity offering, and that's how our ESOP is written. The other issue that we sometimes see in structures today is some of their short exits and the pains that come with that. Or if there's equity offered in a private model, you don't get the long term value as a company matures of getting public multiples that really allow that equity to be worth more and more to really build some wealth building potential for the folks working in the clinics. So there are private ESOPs, and I'm aware of some that other companies have used, and I love the innovation that's happening. And I think the more the merrier. I think more equity in our space is a really good thing. And I'd love to see more companies sharing ownership more broadly and more deeply. In our minds, tying an equity structure to a public valuation and a growing public valuation was sort of a 1-2 plan that was really something very attractive for us, in very much in keeping with tech companies and others that we know about that have made some of their lower level managers or even individual contributors very wealthy after years and years of being with those companies. And that was the goal.
With the ownership for the employees and the ESOP, are they earning it over a certain vested period, or is it a grant upon certain milestones? How do you incentivize them over the course of their participation?
Yeah, short answer is yes. And so it's important to keep reminding the ESOP is yet to be turned on, but it's ready. And I think we're nearing some horizons where we'll be mature enough to turn that on. But it's developed and ready and board approved and structured and SEC cleared. And the short answer is yes. It's a multi-year vest because we certainly want it to build what we want to be a competitive advantage for Inspires, which is if we can keep teams for a year to five longer than they might stay elsewhere, that obviously is a business advantage for us and a competitive advantage. And while they're staying, we want them to have the ability for multiple years of grants to continue to accrue value for them. So it's a 4-year vest. And each time an annum comes around, they get an opportunity to have another grant year. So these stack on top of each other and give the ability for a team member really to look at a multi year wealth building potential for themselves, which I want to add is over and on top of a very robust total compensation plan we've built. I would put the total comp plan we've built with incentives, a really, really innovative benefit structure with the health and some of the things we put into this structure up against companies many times our size. We're investing today in some of those pieces too, so that the total comp model feels very restorative and very healthy for a team member that wants to stay with us for years to come.
Have you seen the employee ownership down to the level of the employees before? Because what we found, because we had an ESOP at our base of how we, to me, there's various instruments how you can give ownership. And ESOP was our first path to it. The difficulty we bumped into is that we were looking for funding at that point, and a lot of investors turned away. Just when you say ESOP, they just give up. That you have the clearance from the board now as you are already approaching it. But have you seen any of the employee ownership models implemented successfully? Because what I found through acquisition model, the most difficult part is that once you grant ownership to people that are there, it's just really difficult to convey the value. And to this tax assistants and everybody else, it's so intangible, it's so difficult for them to appreciate the value and literally work for it, which I find completely different now in the de novo model, where we have it at the base of the inception of each hospital. So I don't know if you bumped into this or thought through the process of how to make it tangible to the people that are actually receiving it.
Yeah, I'm smiling on a few because we could spend a day talking about that. My first part of that is having years and years of experience with a very mature company in a different sector. It was consumer beverage that had an ESOP program much deeper into their maturity. And so after they had delivered a lot of results, built a lot of units, and a highly visible public company that their team members sort of understood what the stock price was and where their place was. And yet we had to repeat and repeat and repeat the value to team members and publish, quarterly and certainly even monthly recaps of, hey, this is what your stock picture looks like. Let's look at your calculator. Let's look at the possibility of your total comp package at the end of this year if we hit these goals. And so I don't think you can over communicate those things to keep a team member imbued with how they impact the business and put a spin on the ball, and how every decision they make should be an ownership based decision, and B, what's in it for me, quite frankly, for each of them as they look at on a yearly basis and on a total career basis. And we've got plans in place to do just that. Certainly the beginning of having an ESOP when it flips on is just going to be educating a team member of what shared ownership is. How do you calculate this? And publishing literally calculators so that a technician working in one of our hospitals can go in and she can say, hey, if I want to pay off my school loans, what does this look like in the next few years? And could I do that? And what do I have to do to contribute to us being a vibrant company to do that? So I think it's a never ending journey. I've experienced that in my own time. And there'll be education that we roll out, constant communication we roll out, always tied back to each team and each group and each individual. What can you be doing to help the company be successful, which therefore goes into your pocket?
Yeah, I think it's really fascinating. I mean, ESOP is familiar to both of us. I have it. Ivan's had it, has it probably again. What a brilliant message. It's all about communication, is it, when you're leading teams of people and re-communicating. But I think the struggle often is because it's not a tangible thing, if you slip up in the communication or if it becomes not important, like core values or any of the other things that we know as leaders need to be in place, it becomes unimportant. So it's really quite fascinating. Are you building momentum towards that messaging now within your hospitals?
We are, yeah. So it's funny when we talk about the communication of an ESOP. On some days, if you ask me, when I would have liked to have turned it on, certainly day one of the IPO is sort of would be a dream day. In a lot of ways, I'm glad we didn't do it earlier, and certainly we went early with the IPO in our history, and that, as I said, has its own learnings and wonderful benefits of it. what we've done the last 2 years is invest and retool and manage and lead and structure our business such that we're seeing a huge momentum in our business, from operations to medical ops to recruiting to KPIs within our business, that really allowed us to polish how we message deliver in today's current state before the ESOP was on. And I'm coming off of a town hall call I had last week with all of our teams, talking about how our year has been so far. And here's where we're seeing great strength. And here's where we have some opportunity. And teams getting much more in the last 12 to 18 months attuned to those messages is starting to build a framework where I'm seeing some sparks fire in each of our clinics around them understanding how their daily work impacts the core business, not only their hospital, but Inspire at large. And as I'm sure you're both aware, that being part of a challenge of any business that goes through M&A activity, you've got to take 1,000 little cultures and turn them into one culture, and while letting each of them have their individuality. And so we've learned a ton in the last 2 years about the balance of those two messages. We don't rebrand our hospitals. We don't do a special chant in the morning or one color scrubs in all of our clinics. And so there's a number of things we do to keep those teams disparate, but we also want them to have an understanding of there is a whole that we're all steering toward, and a horizon we're all going toward. And so we've gotten so good at that message now that I'm starting to see those sparks really fire. And I think the ESOP will mean even more to these folks as we turn it on.
Yeah, that's the journey that I'm on for the last 5 years of how to articulate that value. And I don't know if you're a fan of Great Game of Business, which is a kind of like a textbook of which we take chapter by chapter and literally implement on a daily basis. And we have the kind of the achievement that I've seen in the de novo clinics, and I hope you can achieve that in the acquisition model, is that our receptionists can talk to each other about the labor costs and the cogs and all of those things that mean nothing to most teams. So it's interesting seeing that implementation. But I have a question about the IPO, because when you guys went public, that was very interesting, very early. What are the criteria and sort of decision making around it? Because I don't know enough about it, but I thought that companies should be a certain size or certain stage. For those that are thinking about that a path and journey, what are the criteria that you had to kind of tick the boxes in order to actually take this journey on and successfully accomplish it?
Yeah, there's a ton. I get a little PTSD when I talk about those days because it was an interesting couple of years. And anyone who goes through it will know this, and those who haven't should be forewarned that it's the number of drafts and back and forth and legal work and prep to do that with groups like the SEC and others. It's vast. So it's years of work. In our case, we compressed it, into a short time frame and probably made it even more painful. But getting it done was a wonderful accomplishment, and requires the alignment of achieving those things that you mentioned that the SEC will want to see, that the exchange you'll be on will want to see. And NASDAQ is different than NYSE, and both of their guidelines are changing even as we speak. And caps go up, caps go down, and certain benchmarks have changed over time. And so it doesn't get easier for companies to get out and also maintain compliance. It's also not easy for the small and micro cap company to be in this space where the typical investor, and I think we're maybe all a little bit guilty of this, thinks of 5 or 6 big companies when we think about trading. We forget the thousands of other smaller companies that are on the exchanges and don't get as much limelight. And so when you're one of those, you have to really shout to make sure that the investor, the trader, the investment banker knows who you are. And so it's really being attuned to all those things, being aware of it, recognizing that a lot changes after you get out, but it just adds to the work that a company has to do, because it doesn't change the fact that one still has to execute and grow and attract great talent and build great leaders. So it's almost running two businesses at the same time once one gets out there and is public.
That's incredible. Well, times runs out as usual. We usually ask 2 questions at the end of the show. One of them is there book, TED Talk, any YouTube video, whatever inspired you recently that you would like to share with our listeners?
Sure. To the extent that I get to digest stuff as much as I want to and read when I have a few spare moments, I've been reading Senator Fulbright's book lately, which speaks about the arrogance of leadership. And it's a book written, late 70s, early 80s, as he was the impetus and the founder of the Fulbright Scholarship, and of course, a senator who participated in a lot of the learnings we had from Vietnam and other things that we had happen as a nation, and just what he speaks to about leadership, the very applicable lessons from that time that are very timely today. It's a fascinating read to sort of read it as if it was written last week. So that's been a fascinating book to dive into. And I'm sort of absorbing it chapter by chapter. I have to put it down a little bit as I get a little incensed that we haven't learned some lessons from 20, 30 years ago still.
Yeah, interesting. It sounds fascinating. Kimball, last question is another innovator from our industry that you think would be a good guest for the show.
I'll be selfish and stick close to home. I've had the blessing for the last longer than I care to admit, 20 years now, working with a wonderful clinician named Dr. Alexandra Cordy. She is our leader of business at Inspire, has led at scale for a number of companies in our space, is a Ross grad who's very passionate about how she leads and how she guides medicine, taught me a ton and helps me be a little less stupid every day about the things that I need to be aware of as a non-clinician in our space. So I'd love to see Dr. Cordy have an opportunity to share what she's passionate about and share her ideas about where veterinary is going.
Thank you so much for listening to the Veterinary Innovation Podcast. If you want to hear about our new episodes, please follow us on any social media channel. Also, you can check out our website at veterinaryinnovationpodcast.com. See you next week.